Hello everyone and welcome to my morning report. Charles Prices on Friday the 22nd of July with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively sort of cautious open really. We had sort of the ECB date, the meeting yesterday. They were in a wait and see mode, as they probably should be, to be honest. There's no real data yet that would suggest a drastic deterioration in the Eurozone economy, so subsequently they're sort of waiting to see more data and react to whether the Brexit vote is having a significant impact across the Eurozone. So they're going to wait and see, and that's basically sort of the mode that's the market had been sort of looking for. No real move on the euro at all yesterday, but it sort of is another central bank that is sort of putting off these looser monetary policy moves, and subsequently we're seeing equity markets just stalling a little bit on the back of that. We've had quite a positive move on equity markets in recent couple of weeks, but starting to stall a bit, and that stalling has also been driven by the publishing or the publication of an interview with Japanese Bank of Japan Governor Kuroda by the BBC, who basically said that helicopter money wasn't really going to happen. It's unlikely that the BOJ would do that. But that interview was back in June, which is before the Brexit vote. But still, the markets reacted quite strongly yesterday, and there was quite a strong move actually back into safe haven plays. The yen strengthened, the gold price strengthened, but that move is sort of unwinding a little bit today. The dollar had initially sold off, and it's now bouncing a little bit today. Interesting that we also saw treasuries lower, treasury yields lower, which is a move into treasuries yesterday, but bouncing again today as risk appetite just starts to settle a bit. But interestingly, what we are seeing is the oil price, which is back lower again. We had the rolling over the contract yesterday, which subsequently meant the oil price opened quite strongly higher, but fell into the close and is falling back again today. The continued slide in the oil price is a concern still for me, and that again is another reason why equity markets might be starting to sort of stutter a little bit. But in terms of what the moves are we've seen today is not a great deal of direction. Equity markets mildly lower, Wall Street was lower, Asian markets were lower, equity markets in Europe are mildly lower. In terms of your Forex markets, is mildly higher on the dollar, but sterling is starting to bounce a little bit more after a fairly sort of choppy couple of days really, but it seems to be certainly that the volatility certainly in sterling has reduced somewhat. In terms of what we've got to look forward to today, not a huge amount really. This is the data announcement. We've just had out the Eurozone fashion manufacturing PMIs, mildly better than expected. It's very slightly better than expected. So that's relatively supportive of the euro. But then we sort of move into the afternoon and we look at the Canadian inflation, which is expected to pick up again. It's expected to go to around about 1.4% on the headline and around 2% on the core data, which is sort of around about where we have been in the last month, and we're just slightly lower. And also we've got the flash manufacturing PMI for the US, again basically where we were last month. 51.6 is the expectation there. That's at 245. So my chart of the day is the dollar Swiss today, and dollar Swissy is still struggling, isn't it? It looked to be sort of pushing towards that 99 figure resistance of the mid-July high. In the last couple of days, he had two attempts at that, very slightly breaking out 99.04, 99.06 intraday highs, but then sold into the close. And yesterday's candle was pretty bearish, or pretty negative, and selling sort of quite close to the day low. And the impact that that's having on this chart is that this run higher of candles, this run of positive candles, is just sort of starting to reverse. Again, today's trading is sort of mildly lower. As you see, these sort of momentum indicators just beginning to roll over. You've got the MACD lines coming and rolling over. The stochastics sort of beginning to roll over as well. RSI failing around 60. So is this turning into a little bit of a correction? It is possible. We've got the support at 98.40 basically. that's basically been supportive for the last couple of days, really. And if that sort of breaks to the downside, you'd say that that's a top pattern. You'd sort of measure that down from 99 figure area to 98.40, and that's what 60 ticks of downside. So it's 97.80, which is again around about that low that we saw on the 15th. So it seems as though this again is starting to roll over. You look at these hourly momentum indicators; they're more negatively configured, aren't they? Look at that. Look at those MACD lines. On that move to the upside at 99.40, those hourly MACD lines never got anywhere near the previous high. Neither did the RSI, neither did the stochastic. So it would suggest that the rally is sort of losing a bit of impetus in the last few days. You could even argue that is, I suppose, a mild uptrend channel. Although I'm going to do this very roughly. And you've broken through the bottom of it, and it's starting to sort of find resistance around the old trend channel uptrend. So you could argue that that would start to sort of turn into a more of a corrective phase for the dollar Swissy. And once again, it seems as though that the traction in this move higher is running out of steam, and it seems as though we're sort of still stuck in this trading range, this broadband trading range that we've been in for the last sort of 4 months, really. 95 figure up to 99.50. 99 figure seems to be a resistance within that as well. So it just seems to be rolling over again. We could come back and test some support, certainly if these momentum indicators start to deteriorate, which they seem to be just starting to. So I wish you good luck in your trading on dollar Swissy today, and I will speak to you later. Thank you.